I think that probably 10 or 15 years from now, all money is going to be, or a lot of money is going to be on chain. I don't think it's just going to be digital dollars. I think that there are going to be tons of currencies that are online. I owed my friend a few dollars, and he was in California and I was in London, and he wanted the money with USDC on Solana. Gave me the wallet address to send to, which had no link to him whatsoever, other than I got it through some Google Doc that he gave me. And I texted him and I was like, "Is this the right number?" And he said, "Yes." The right address, and he said, "Yes." And I sent to him, and I held my breath, and it was terrifying. And then, a second later, he texted me and he said, "I got the money," and I breathed a sigh of relief. And I had this moment where I was like, "Oh, well, that's a problem that I know how to solve."
Remittances have come a long way, with instant transfers, lower fees, and slick apps. But under the hood, the same old frictions remain: liquidity gaps, regulatory hurdles, and hidden costs across broken corridors. Today on the F Squared podcast, I'm joined by Mike Hudack, CEO of Sling, a company building the next chapter of global money movement. Sling combines the power of on-chain stablecoin infrastructure with the simplicity of a social payments experience, creating a platform that's fast, transparent, and built for real people, not just bank accounts. From London to Accra, Nairobi to Dubai, Sling is redefining how money moves and who gets to move it. Let's dive in. So, thanks for having us, Mike. I've been really looking forward to having this discussion. I think you guys made quite a splash last year in Nairobi. You're the most downloaded app for some time, and I think Kenyans even crashed your servers. So many people were signing on. So good to have you on the show. We're gonna talk about Sling, stablecoins, remittances, but before we do that, probably just give us small intro to yourself, and then we can jump in.
Yeah, cool. My name is Mike. I grew up outside of New York. I live in London now. I met a English girl in New York probably 20 years ago or something like that. And then I dragged her to California, and then she dragged me to London. She doesn't like it when I say dragged, but you know. Um, I've lived here for the last 10 or 11 years, and I've been building stuff on the internet since I was a kid. Since I was 15, I dropped out of high school and started building stuff. So I was at a startup doing online video back in the day. Worked as an engineer for a while at a bunch of different places. I was at Facebook for a while, where I did ads and sharing and all sorts of things like that. And then I did food delivery at a company called Deliveroo. And then I was chief product officer at a neobank called Monzo. And then started Sling Money maybe 2.5, 3 years ago, after having kind of a crazy experience with stablecoins and just becoming convinced that they were the future, or a large part of the future of the way that money was going to move around the world. And I just kind of love building things.
Got it. No, fantastic. And that actually leads us into, the first question. And I like that you ended the part at from Monzo to an experience in stablecoins, and now the idea about stablecoins being the future. And so, I think Sling, you communicate yourselves as helping people send and receive digital dollars across the world.
Yeah.
And so if you think about it, that is a big chunk of that is remittances, right? And so we'll start at remittances, especially in the African context, because this show is primarily about fintech in Africa. Now, in the last 10 years, the likes of Sendwave, Zeps, to an extent Wise, Nala, Lemfi, they've all built, decent, sizable businesses, very successful businesses, on the idea of making remittances more efficient, right? In some corridors, the fees have been reduced significantly, and now there's almost an instant aspect to it. Of course, behind that is bank partnerships, fintech partnerships, PSPs, mobile money, and all that kind of stuff. Now, so that's the kind of market that Sling is getting into, right? Where some efficiencies have been built up over the last 10 years. Now, for you, fundamentally, how then do you get into this market? What fundamental problem is being solved? that that stablecoins can uniquely solve that the existing system may struggle to solve.
Well, my view is that really, first of all, I don't think about remittances as a separate category. Like I think that, there was a time when I was growing up, um, you either made a local phone call or you made a long distance phone call or you made an international phone call.
Got it.
And like a local phone call was free. A long distance phone call was maybe like, between 10 and 50 cents a minute. And an international phone call could be like $1 or $2 a minute.
Yeah, yeah,
And now I don't think we think about it at all. We're having this conversation over, 1,000 miles or more. And nobody's charging us for it. I guess we're paying a little bit for Riverside,
yeah,
which is a great platform.
yeah,
But I think that the internet has gotten us to the point where most communication is instant and free around the world and borderless. And I just think the same should be true for money. And I think that was impossible 10 or 15 years ago, but stablecoins actually make that possible. And it shouldn't matter whether or not your money is going, a mile or 10,000 miles. The transaction should be basically free and instant, and you should be able to send to like a name and not a number. You should be able to just like find the person, send to the person, and be done with it, and not fill out a huge form. It just be a couple taps.
yeah.
Um, I don't think you can build those kind of experiences on top of traditional money. I think you need to use something like a stablecoin to do that.
I think that's a very interesting point, and actually, interestingly, it leads me to the next question. So you keep you keep leading me to the next question. So that speaks to around foundational architecture, and by talking about the idea of like sending to someone, it means that you kind of have to have some internal address system that says that this
Yeah.
is Mike, this is Samora, this is so and so, and so what you're saying is that it's fundamentally a UX differential where now you can actually send money to someone and that's the whole thing. So behind the hood, like how do you make that happen,
Yeah.
and just make that experience seamless?
Well, there are a couple different pieces, right? So, like, I think that probably 10 or 15 years from now, all money is going to be, or a lot of money is going to be on chain. I don't think it's just going to be digital dollars. I think that there are going to be tons of currencies that are online, with CBDCs or stable coins or tokenized deposits. We don't really care.
Yeah,
It doesn't really matter. So there's a ton of infrastructure to support on ramping and off ramping for us, making that really seamless and instant and inexpensive. And then what you're talking about is a directory service. So, like, one of the first experiences that I had moving stablecoins, it was about 3 years ago. And I owed my friend a few dollars, and he was in California and I was in London. And he wanted the money with USDC on Solana. And so I went to Coinbase and I bought a bunch of USDC and then I transferred it into a Phantom wallet. And then he like gave me the wallet address to send to, which had no link to him whatsoever, other than I like got it through some Google Doc that he gave me.
yeah.
And I texted him and I was like, "Is this the right number?" And he said, "Yes." The right address, and he said, "Yes." And I sent to him, and I held my breath, and it was terrifying. And then, you know, a second later, he texted me and he said, "I got the money," and I breathed a sigh of relief.
Yeah,
And I had this like moment where I was like, "Oh, well, that's a problem that I know how to solve, and it's a real problem." That anxiety that you feel, whether you're using a traditional payment system, which is just a bit slow and you don't know if the money's going to get there and you're nervous, or you're using, stable coins and wallet addresses, just knowing that the money is going to the right person is unbelievably important. And so we operate a directory where we KYC everybody on the way in. We check ID, and then we put you in the directory with your name and your all of your details, and that resolves to a wallet address.
yeah.
And we take care of making that link for you, so that you can be confident that whatever you're sending is going to the right place.
And so and correct me if I'm wrong. There's two like sources of value. Like I'm slowly starting to understand. there's the moving money, at least for Sling. There's the moving money aspect, and there's like the address and directory aspect, right?
Yeah,
And one could argue that the address and directory can actually be utility that you give other fintechs and neobanks and everything, that's saying that we've solved this specific heartbeat, so that
yeah,
because Mike might not be on Sling, you may be on Monzo for say, and I'm here on M-Pesa, but if I send money to you, like I'm using Sling's address system to kind of like know that I'm sending money to Mike. But so far it seems that you're building all this in house, right? So
correct.
what's the logic behind that?
Well, what you described would be a great thing, a
Mm,
great product, and we thought about building it. And
mm,
like, we've got some early design documents that outline something like
yeah,
that.
yeah,
I think though that like in order to be able to offer a great experience to people, you want to be able to control as much of the end-to-end experience as possible in a good way. Like
mm,
we're building an open platform, so
mm,
you can take stablecoins in and out. Your wallet is owned by you. It's a self-custodial wallet. You can
mm,
export your keys and open your keys,
mm,
open your wallet in some other Solana software if you want to. Like
mm,
it's a very open system. But for the average user, we think that in order to offer a great experience, we need to kind of like own or control or manage as many of the different aspects of the system as possible because there's so many things that can go wrong. It's
mm,
like you're adding money in the US, you're withdrawing money in Kenya, you're sending to somebody in between.
mm,
There's just a huge amount of work to make that work well. And
yeah,
when you introduce like other players that you have no
mm,
oversight into
yeah,
and you can't get to like a certain quality bar or
mm,
to like commit enough to the network,
yeah,
I think that you just end up in a situation where the user experience is disappointing.
yeah, yeah. You're
Like,
right, and that makes a ton of sense. But going back into the underlying infrastructure and how Sling works, what partnerships? I've seen you work with Stripe Bridge. Like, what partnerships and kind of ecosystem partnerships make the entire thing work?
yeah, well, so the app is available for download in
Mm,
like 120 countries, right?
mhm, mhm,
And we have fiat on and off ramps in about 90 of those,
mm,
which are a combination of debit cards for both adding money and removing money. So you can do like a debit card push payment,
yeah.
and then local payment methods like faster payments in the UK,
Mm,
SEPA in Europe, M-Pesa, Airtel Money, etc. Throughout Africa, Pix, Spay in Mexico, etc. And each one of those is integrated to some level of depth with a partner, where it depends on our licensing in that country, our legal opinion, what kind of infrastructure we need, how big the market is, all of
mm,
those things that determines whether or not we're going all the way to the bare metal or we're operating at some higher level of abstraction.
mm,
But it is honestly like a huge number of partnerships, and one of the
yeah.
things that we've had to get good at over the course of a couple years is like finding the right partner, signing a good deal with them, and integrating them to a high quality and a high standard. And then,
Mm,
with payments, like, I mean, it's fascinating. Just doing that integration is then again insufficient because it's a game of exceptions. So there
yeah.
are like a million things that can go wrong along the way. And so
Yeah.
you have to then find and fix all of those things and all of those edge cases across all of them. So
Mm,
in some countries we have two or three or four partners.
yeah.
In some countries, it's one. And all at different levels of depth.
Mm. And it's I'm glad you walked us through that, because one of the things of, as you said, in payments, there's so many things that can go wrong, especially the higher dependencies you have, the bigger the probability of things going wrong, and a lot of time is spent figuring things out and sorting out issues as opposed to actually building the business. But just speaking about that, and going back to the original idea about, like, Wise, Sendwave, and all these players, right? um, they've perfected the thing, at least as close to perfect as can be. Still, there's still a few chinks in the armor, but the customer experience over time has become more predictable, right? Whereas for you, you're promising something very interesting, especially the user experience aspect of it, of that, right? Of sending money internationally and sending to a friend, and the anxiety of him receiving the money or not being there. But you have to make a trade off, and now because of all the partnerships, right? And do you feel one could argue that, listen, the most important thing is that the payment is reliable, and therefore I'd still stick to the old system because it gives me. I'd rather the reliability than the consumer experience. Is that something that you come across in your business, or is that a trade-off you guys are grappling with?
Well, I think that we have to be unbelievably reliable.
Yeah.
I came across one of the first emails that I wrote to somebody about wanting to build this thing.
Mm-hmm.
And, I think that the first couple sentences were saying, I believe that stablecoins and fast blockchains are going to be the way that money moves around the world long term. Like we're going to get real internet money for the first time. And what I mean by real internet money is it's like a true digital good. And we can talk about the difference between that and like a Nala or a Sendwave or Wise at some point if you want. And I said that the user experience of these things so far is pretty awful. And we want to build, like the iPod of stablecoins and fast blockchains, which means that the UI is really great. The experience of using the thing is wonderful and it works every time. These are very, very important principles. Now, as you say, when you start, especially when you're building something which is quite broad, you're going to hit all of these things. You're going to have, problems as you build, and you have to find a way of rapidly improving and getting to that level of quality, getting to that kind of like Apple level of quality, which is what we've been doing for the last year. We removed our wait list last September, and we've been doing all of that work for the last, N months. And I think that it's like very clear to me that this new way of money moving is going to be the way that it's going to work. Like I said, 10 years from now. I think that the reason for that is it is truly faster and less expensive, and it requires a lot fewer people to build and a lot less infrastructure to build. And if you can get it to the same level of quality execution, then you can beat everybody on price and speed and features over time. And that's our bet.
Maybe you walk us through, because I've got a question that stems from that, but probably walk us through now that fundamental difference between stablecoins, the digital good, and this is just to educate. I've written a lot about stablecoins on my newsletter, but I want to get your perspective of the fundamental difference between digital goods as stablecoins and a fintech wrapper over incumbent systems.
I'm going to go all the way down to like a different layer of abstraction, far away from the user for a moment. And, I think physical money is printed by the government and you have a physical representation of it. And if it goes into a bank, it goes into a vault or something, and then it's given back out and the bank holds a ledger. Digital money, the bank vault is replaced by a database which is operated by the bank. There's no physical money, there's no physical cash, but the bank operates a database which is the equivalent of that safe. And the databases are not compatible with each other. So even in the same country, like the Monzo ledger and the Barclays ledger are not compatible with each other. They can't really talk to each other. And so every country then has a layer, like a messaging layer for communication between these databases, or multiple ones. So in the UK, there's faster payments. In the US, there's ACH and soon to be like RTP and so on. The thing that stablecoins and fast blockchains together, because I think that one is kind of not very useful without the other. They really go together. Is everybody now is on the same database. And the database is a shared ledger across every single participant in the system. And so there is no messaging layer anymore. And the thing about the messaging layers is that when they're domestic, some of them are good, some of them are bad. When they're international, a lot of them are actually quite poor. They're very slow. Like Swift is
Yeah.
super slow.
Yeah.
And what you're seeing, what like Wise and Nala and all of these people have done is they built their kind of like proprietary closed messaging layers to link, you know, a bank in the UK with M-Pesa or
Yeah.
whatever.
Yeah.
And I think that what's happening now and what's going to continue to happen is everybody is going to move to these kind of like more open systems with everybody being in the same database, which means that as a provider of software for money movement, you don't have to worry about ledgers anymore. You don't have to worry about having like correspondent correspondent banking relationships in every one of these countries. You don't need to have like local accounts in all
Yeah.
of these
Yeah.
countries.
Yeah.
Half of the moving parts, half of the infrastructure just goes away, which means there are fewer things to go wrong, and it's far more efficient. And you can build really incredible consumer experiences on top of that.
Yeah, and and maybe this is like a stepping aside of. So you've raised a very valuable point. It's fundamentally an innovation in database, and especially how open the blockchain is in terms of interoperability. Whereas previous systems, everyone has their own ledger and they have to build these workarounds to speak. But then one of the kind of maybe I can ask you, how do you see it evolving? Is it that everybody now starts issuing their own stablecoin, like JP Morgan issues their stablecoin, because and using the unique case of JP Morgan, and not that they have, I don't know much about their stablecoin plans, but you're saying that, okay, let's move from a proprietary database, let's now put money, our database online, so that it can work with everyone else, right? And then everyone does that, and now we're all on the blockchain, and now we can send money easier, right? If everyone does that, then uh, you know, what role does Sling play in such a system?
Well, I think, I really wanted to answer the first part of your question. I answered the first part of your question and the second part.
That's
So,
fine.
what I think is the first part.
Yeah.
So, I think that we may go through a period of lots of different proprietary stablecoins, or like different brands of stablecoins. So the JP Morgan coin, the
Yeah.
Bank of New York Mellon stablecoin, the
Yeah.
Circle stablecoin, the Coinbase stablecoin, the Stripe stablecoin, whatever. Um, I don't think that world is going to last forever. I think that there is actually like network value
Yep.
in stablecoins. You know, USDT is widely accepted, USDC is widely accepted in different regions, and like I think that there's true value in that. And it's very hard for every financial institution or non-financial institution to compete with that kind of network value. That doesn't mean that the current leaders are going to be the future leaders. And so there's going to be a war
Yeah.
for a few years while
Yeah.
people try to figure that out.
Yeah.
But I don't think that we're going to end up in a world with a million different stablecoins. I think that that's not a good world, and it's not one that consumers are going to like.
Yeah.
And so there will be centralization of some sort, selection of some sort. In terms of the role that Sling plays, I think that the most valuable position in this market is with the consumer, and building a consumer network. A lot of it comes back to the directory that we were talking about earlier.
Yeah.
And I think that if you can offer people a really seamless, beautiful experience that solves real problems for them, that is built on top of that infrastructure and abstracts it away so that you don't have to worry about it, but it facilitates magic, that is the most valuable place to be. It's the place of highest leverage.
It makes a lot of sense, and in any business, actually, in financial services, you want to be as close to the customer as possible. Of course, there's some players who play at an infrastructure level, but sometimes infrastructure becomes commoditized in the long term. So how are you guys making money? Because a lot of a lot of your payments are promoted as free. So what's the
Yes.
monetization there? At least for now. and how do you see it evolving?
Yeah. So we make some, trying to think of the right way to phrase this exactly, but
Mm,
when people buy stablecoins with Sling and hold
mm,
stablecoins,
mm.
um, we do make some revenue from that.
Yeah.
So we get some stablecoin yield. That's the first part.
Mm,
Um, the second part is that there are uh, some markets where there is an arbitrage between like a US dollar stablecoin and local fiat.
mm,
And that allows us to offer users a free transaction at the mid market rate, but still make a little bit of money on that transaction. And then over time, we will introduce some additional features that intrinsically make money in a kind of like indirect way. So,
mm.
you can imagine, for example, we might introduce a debit card or a credit card, which you make interchange revenue from.
Yep.
And I think like one of the really interesting things about the thing that we're building and the way that we think about it is that, this is like a domestic bank business model.
Mm,
Domestic banks don't charge a lot of money for transfers and all
yep.
sorts of services and
Yep.
stuff. Um, they might sometimes have a minimum deposit value, a minimum balance before fees kick in,
Mm,
or they might have like some fair usage fees on
yep.
certain things, or there might be certain unprofitable things that they charge money for. But
Yep.
I think one of the really cool things that stablecoins make possible, we believe they might make possible, is this kind of like expansion of that kind of business model to be
Mm,
everywhere.
mm,
And that's the really cool thing, I think, about what we're building and why we're building it. We want to connect a billion people around the world to an instant free or nearly free financial system.
yeah.
And we think that the tools to do that have recently become available.
Mm. Makes sense. One of the things that speaks to this and something you mentioned earlier. So you mentioned that 10, 15 years time, the native way of sending money, and I think it might even be sooner. It's gaining traction. Will be through
Yeah,
digital money, stable coins, and now you just mentioned the idea of like Sling as a domestic bank equivalent, and that's true, right? Like it's a store of value, and so it's a retail bank, a global retail bank, if we could call it. But
yeah,
if you're to invert and just look at what's the thing that kills this vision, one huge thing is regulation, right? Now, the Genius Act has passed in the US. I think there's a crypto-friendly government in place. At least the fact that it's now legislation makes it harder to remove. But a crypto-friendly regulation cannot be. I mean, administration cannot be taken for granted. Things
for
can
sure.
flip, right? And so one would say, I'd say that the biggest thing about the thing that can actually destroy this vision is just global regulatory pushback. um, because as well as I know that central banks have a lot to lose or gain lose if the entire world moves off chain, right? What you mentioned earlier about like proprietary databases, like standalone databases, they're kind of like administered or governed by the central bank, and that's why it gains a lot of its value. So how do you think about regulation, being the
Yeah.
thing that destroys this vision?
But we thought about it very deeply from the beginning.
Yeah.
And I had this experience of, being on the senior leadership team at a very closely regulated bank in the UK with,
Mm,
very well respected regulators.
mm,
And so being both a technologist and having that experience, led me and then our founding team to think very, very deeply about this. And we started by just thinking about what are the things that governments really care about?
yep.
Like, put aside current regulation and everything else, like, what are the things that they truly care about? And, two of the things are like anti money laundering and financial crime controls
Mm,
are like deeply cared about by most governments around the world.
yeah.
And the other is um, currency policy. So, that might be currency controls. It might be the ability to set your own interest rate. It might be the ability for your currency to float appropriately. or to be controlled versus another currency, etc.
Mm.
Those two things are incredibly important to all regulators around the world, as is prudential quality, prudential regulation, whether or not somebody's going to lose their money, right? So those are kind of the three things. So on that point, we have only ever worked with incredibly high quality stablecoin providers.
Yep.
We don't support every stablecoin in the world.
Yep.
We support prudentially regulated, high quality purveyors of stablecoins that are, regulated and trustworthy. So that and store their funds at like very, very high quality institutions. So we thought about that deeply. In terms of currency management and control, we don't necessarily believe that the world is going to fully dollarize. And we know that there are lots of countries in the world that do not want to dollarize. And so we've built the entire platform to be able to support multiple storage currencies and to accommodate central bank regulators' desires in that regard. So like we use a US dollar stablecoin as the default in a lot of the world, but we use a euro stablecoin in the Eurozone.
Yep.
And we can do that anywhere as long as the stablecoin is high quality enough. And then we also put a ton of work into figuring out how to build a proper fin crime and anti-money laundering program on top of a blockchain, and have a lot of novel, developed a lot of novel technology in order to be able to do that. So we put that foundation in from very early on, and then started working with regulators. So we are, for example, regulated under MyCar in the Netherlands. And we have very carefully picked regulators who are very globally respected. The Dutch are, good at what they do in this field. And so instead of going to some random country in Europe that might issue like my car registrations faster, my car licenses faster, we went straight to the Dutch and worked with them so that our partners around the world can have confidence in that,
Yeah.
And so that kind of approach, I think those things together, it's crucial. It's crucial.
Got it. And speaking of that, and this is my personal view, you may agree or disagree, but I think that the underlying thing of making payments easier and giving people better store of value capabilities is fundamentally like a global south problem. That's where the need is the biggest, right? And even if you look at USDT, it's grown on the back of enabling the global south to send and move and hold dollars more efficiently.
For sure.
Starting with Greater China and moving to the rest of the world. And so the issue of currency controls and that now plays a bigger role in your roadmap, because I'd imagine that the value of a dollar account, accessible dollar account, is much higher in Argentina than it is in New York, right? But the currency control issue is also much bigger in Argentina than it is in New York, right? So how are you navigating that? And that is two things. Number one, do you agree that the biggest problem is in the global south? And if you do, then the capital controls will be bigger in the global south.
Yeah. Well, I think that there are a set of benefits that you get from a product like Sling that have varying value and depending on where you live, right? I do think that having access to dollars is for sure more valuable in, for example, Argentina than it is in New York. Not because having access to dollars in New York is not important, but because you can just walk into any bank branch in New York and get a dollar account, right? Where it's like harder in other countries. Solving that problem of access to dollars is important to us, but not the only thing that matters. The other thing that really matters to us is that if you are in Argentina and you have family in New York and you have family in Spain, that you should be able to transact with them instantly and for free. And for sure, you as the person in Argentina, I'm sure, would also love to have access to dollars. It'd be great. I use Sling today for moving money between my account in the UK and my account in New York. And it's differentiated for me because the funds are immediately available. It's instant across that corridor. It's instant across all the corridors that we operate in. Now, are regulators over time going to crack down on stablecoins as part of their currency controls? I don't know. We work with phenomenal regulatory counsel all over the world who kind of give us some sense of where things are and where
Yeah.
things are going
Yeah.
and
Yeah.
how we need to operate and how we need to think about these things and so on. I don't know what the future of this is going to be. And I'm not sure that anybody really does right
Yeah.
now.
Yeah.
And I imagine that a bunch of countries, if you took 6 countries, there are probably going to be like 4 different approaches to how to apply currency controls or not apply currency controls to stablecoins. We will see, and we've built a system and an infrastructure which is sufficiently flexible that we can flex with that
Yeah.
while meeting real user needs.
Yeah. And I think so far, if you look at it just practically, and I always tell people this is that uh, take Africa, for example. I'm 100% sure that all the central banks know the stablecoin volumes that are moving within their countries, right? The CBN knows, the Central Bank of Kenya, they're not blind to this stablecoin activity. I think if it was a massive problem, like we simply cannot have it, that would have cracked down a long time ago. I think it's just, for me, when I look at it, is that ultimately dollar activity is not changing. It's just moving through different rails, right? There's no fundamental change in the volume of dollars getting out. Maybe there's more coming in, but it doesn't change anything from the FX perspective. What it changes is that money now is moving through stablecoins as opposed to moving through Swift. If anything, I see the big thing happening is more around KYC and AML and kind of roping stablecoins into the KYC and AML framework.
Yeah. Yeah.
Because to be honest, some of the stablecoin activities just companies who a normal bank wouldn't bank, right? And
It's true.
so that's
Yeah.
probably what's gonna happen.
Yeah. I think that there's some truth to that. And
Yeah.
we've built Sling from the get-go with the KYC and AML capabilities built
Yeah.
in because, it's pretty clear this is where everything is going, even if it's not there yet.
Yeah.
And we wanted to be on the right side of that history.
Yeah.
And so, when you sign up for Sling, you have to complete full KYC. And we do have it, transaction monitoring and all of those pieces, which I think is like a very important part. Again, if you go back to what governments care about,
Yeah.
it's a very important part of what they care about.
Exactly. And I'd imagine for Sling, especially since you're kind of like consumer business, consumer fintech business, brand building is an extremely important thing.
Sure.
First of all, you have to build awareness. You also have to kind of build education, right? One of the things is that for a lot of average Joes around the world, sometimes crypto is seen as a scary thing and a scammy kind of thing,
For sure.
right? And that speaks to your market comms and how you go around building awareness. So I think there's two things to this. Right now, who are you seeing uh, Sling building traction with? Like, what kind of consumer demographic really resonates with your messaging? And then how do you now take that mainstream such that some guy on the street, some grandma, maybe not a grandma, maybe someone a bit younger will adopt stablecoins or at least adopt Sling as the primary way I get to use money. And the reason I'm asking that is that especially in markets like Africa, if you look at M-Pesa, the agents did a huge job in building that trust, and it's a shopkeeper, it's someone I know and there's trust. But for
Yeah.
Sling, it's purely digital. So how do you build that trust? So there's two questions in there.
Yeah. Yeah, totally. No, it's a great question. I think the first thing is we've gone back and forth a ton on how much to abstract away the stablecoin, how much to talk about it. And there's just a reality that when you build on top of stablecoins, some of the physics are different, and so I think you do have to kind of like people need to even if the physics are not different, people need to know what they're using. I think that's very important. So we have to say something. We have to talk about the stablecoin in some way, and we do. Um, that naturally leads you to a younger, more tech savvy user base. And it's funny, like there are lots of people, I'd say like under 35, maybe, who like will do like a user interview and we'll talk to them and they'll be like, oh, well, I'm not sure that people trust stablecoins, but I love the product and I use it all the time. And you're like, oh, well, you use them, you trust them, it works for you. And I think that's all about, there are two things happening at the same time. One is we have to offer every user a great experience. We have to make sure that this thing works for them. It works every time, and they feel like they can rely on it and they can trust it. And at that point, I don't think it matters whether it's a stablecoin or something else. It's just like, okay, it works great. Then there's another thing which is happening in the world, which is like the Genius Act, all of these announcements that are happening every day. I think Zeps just announced that they're going to be using USDC for a bunch of stuff. The Fiserv just announced stuff like Stripe is doing this ton of stuff with stablecoins, etc., where the world is clearly moving in this direction. And so I think that if we can offer people a great experience and great support and have the product work for them, and when and if it doesn't work, give them amazing support around that. And then the world becomes more comfortable with this new technology over time and differentiates it from the casino of crypto. I think we'll be in great shape.
Yeah, I mean, makes a lot of sense. So you have to focus on yourself, make sure you're doing a great product, and then hopefully ride the wave. And at the end of the day, I think every great business has ridden a wave. Like you need to catch a wave and you need to ride it.
That's right.
And
That's
so
right.
it makes a ton of sense. What does success look for you guys, right? And the reason I'm asking that is because even this some of this traditional I would traditional in the sense that they're not using stablecoins, they're tech savvy companies, but you're seeing, at least in the African context, companies like Lemfi moving beyond traditional remittances. I think they bought a credit card company in the UK, and there's a move towards now moving beyond remittances, right? And so the space is getting heated up, and more people are seeing the value in just moving beyond facilitating payments to offering a more comprehensive financial service. What does the future look for like for you guys?
Yeah.
What is your right to win specifically? At least what you think of internally as your right to win. You've mentioned the address system. You've mentioned customer care and the customer experience. Maybe talk us through about that. The right to win.
Yeah, and speed
Yeah.
and cost. And I do believe that over time we do need to offer additional services
Yeah.
like a card and so on in order to deepen it, like deepen the relationship with users and make sure that we earn the right to be front of wallet by offering all those services, right? But I think that a huge amount of the value really comes from the network and comes from building social experiences.
And it's interesting because I think there's a World Bank report that came out last week or the week before, the Global FinTech Survey, and they found that close to 80% of now people in Africa are using mobile money as their primary financial. And what that told me is that you might have a whole generation that may not even open a bank account. And it seems crazy, but if you look at how people are spending and moving their money, some of the traditional value sources of value from a bank account may be spacious in the years coming. Now, I had one question for you, and I actually had to write it down so that I can remember it. So, Mike, you're tackling a problem that financial institutions and fintechs have struggled with for decades, right? What is the single hardest, non-obvious lesson you've learned so far while building Sling that you'd share with another founder trying to solve a foundational hard problem? be it in Africa or anywhere in the world.
It's a very broad question. Do you want to narrow it down at all, or is it just like generally what is the lesson that you have learned?
What's the biggest non-obvious lesson you've learned?
Non-obvious.
Yeah.
You know, I don't know about non-obvious, but building companies is hard. Building great products that people love that work every time is hard. Building great teams is hard. You really have to believe in the thing that you're building and why you're building it in order to get through all of the hard elements. Like starting a thing from scratch is just difficult.
Yeah.
And so I think you have to really make sure that the thing that you start is worth years of your life working incredibly hard, and that the people that you do it with are people that you want to spend time with every day,
Yeah.
and that the problems that you're working on are valuable not just to you but to the world. You know, I think that those are very important things, and I think that it's very easy when you start a company to get excited about a shiny thing or whatever and to go, but I think that you know it needs to pass all of those tests,
Yeah.
because
Yeah.
it will be incredibly hard work, and you know it's not always easy to predict in what ways. But if you ask yourself why something doesn't exist, there is usually a reason, and then you come back to your reason to believe, your reason to win,
Yeah.
your right to win. What is it about you and the team and everything else that are going to allow you to, you know, overcome the challenges that are the reason that that thing has not existed yet? And are all of those things going to be in place for you? I think is
Yeah.
incredibly important.
Yeah. Yeah.
You know,
Makes a ton of sense. And, just maybe a leadership lesson. Everyone has natural aptitudes and everyone has things that they don't enjoy doing. What's the one thing like you don't enjoy doing about your job? For me, it's the admin. I hate
it's
admin.
for me, it's the admin as well. I hate the admin,
Yeah,
100%.
yeah,
You know, there are people who love going through the spreadsheet in detail
exactly.
every day and
Yeah,
all that kind of stuff, and that's
yeah,
what they love.
yeah,
It's not what I do.
yeah.
Yeah.
And what's the thing that you naturally enjoy and you can do in your sleep?
Oh, I love building things for people and talking to the people who use the thing that I build, and like solving problems.
Yep.
You know, I just love it.
Great, Mike. That's been amazing. I think really gone. I've gotten a deeper understanding about Sling, um, especially the idea of now building this kind of address system so that you can build a social experience beyond just moving money, and then riding the waves of the fundamental stablecoin wave that's coming. And I think it is
Yeah.
coming. I think I wrote 5 years back. I think I wrote 5 years back about stablecoins being the thing that excites me the most about crypto. And at the time, you can remember maybe 2021, people thought stablecoins were this kind of boring thing that is anathema to the idea of decentralized crypto and everything. But I was like,
Yeah.
if you think about it, it is solving the biggest problem. If you have a stable value and you can send it across the blockchain very quickly, then that's the thing that actually unlocks value. So really keen to see how your journey goes, and thanks for joining the show.
Thanks for having me. I really appreciate it. I really enjoyed it. I'll see you
Thanks.
soon.